There once was a stock that put to sea. The name of the stock was GME.
Hello friends, this is your boy Dancing Tesla coming to you from my virtual Tesla. The gaming frenzy in GameStop is still going crazy, and I want to give you guys my thoughts on what I expect going forward. My position is 100 shares at $241. I entered the trade originally to stick it up to the big hedge funds, and I was prepared to lose it all, or so I thought. Between you and me, I was a little bit depressed when GameStop went to $38 a share. But I plan on diamond handing this the entire way regardless, as I'm very bullish on the company's fundamentals and the turnaround story. The main thing I want to do is separate the facts from the Fuds and set realistic expectations for us. With over 9 million Wall Street Bets users, and most of them beginner traders who are posting with seemingly high convictions on what they think is happening, it's actually pretty hard to differentiate between the facts and the Fuds. I want to start off the Fuds first, but don't get me wrong, I'm still super bullish on the stock long term, and I think you shouldn't be investing in the company based on these following points. A massive short squeeze will happen with diamond hands. We're actually in the dark when it comes to information, and even the short interest data published by FINRA is delayed by 2 weeks. In the Volkswagen short squeeze, the shorts were in the dark, and information is key when it comes to these plays, and sadly we fall short on that department. There is no way anyone should be buying into GameStop in hopes of a short squeeze. We have hedge funds on the ropes. There are actually a lot of hedge funds in this play, long or short, and they most certainly have more money than us in it. Furthermore, funds do not have to publish their short positions, so we don't even know who we're up against. Chamath, Elon, and Mark Cuban will come and save us. They can just buy GameStop for us or just keep tweeting about them. Not really. If they did anything, it would be considered stock manipulation, and they could get into a lot of trouble with the SEC. Ryan Cohen will burn the shorts. While I do believe that he is interested in turning around the company, he will save both the company and us bag holders in the long term. But in the short term, he has been very quiet because it's usually a bad move, and again could be considered stock manipulation and cause him to be in trouble with the SEC. Oh my god, short ladder attacks! What the hell's a short ladder attack? If every time the stock market goes down, should we just scream short ladder attacks? Gamma squeeze is coming because options are expiring next Monday, and my price target is $420. Options expire all the time, and if this was the case, we should be having a gamma squeeze every week for every stock. GameStop is bringing down the entire stock market. No, just the S&P 500 has $31.61 trillion in market cap, and there are a ton of stocks outside the S&P 500. GameStop is currently trading at about $15 billion, a tiny fraction of the entire market. Wall Street Bets is telling me to buy, so I should buy. This is a risky play, and I'm fully prepared to lose every single penny. You should always do your research, your own research, before jumping in. If you made it this far, congratulations. I'm about to share some of the facts of GameStop, and this is where things get interesting. So the first fact, possibly the most interesting and the most important fact, is that Ryan Cohen is joining GameStop. Currently, he holds a 13% stake in the company. And if we look at Ryan Cohen, he has an incredible track record. He was the co-founder and CEO of Chewy, and he sold Chewy to PetSmart for $3.35 billion in 2017. And, after Chewy IPO'd in June 2019, we just saw this massive run. And if we take a look at the stock price today, it's at $43.25 billion. Insane. And this is a company that had to fight tooth and nail with Amazon, one of the largest online e-commerce retailers in the world. And Ryan Cohen was able to make that happen. So he has a very, very, very good track record. And we don't know if he's going to, reproduce the same magic he did at Chewy with GameStop. But we cannot deny that he definitely has a very good track record. And that's something I really like about him. The CFO also resigned. Some say he was forced to resign as a part of this transformation. Nevertheless, another change in the right direction. They're currently looking for the perfect replacement who will be aligned with the company's newfound vision. Ever since Ryan Cohen has joined the board, he's been making changes to the C-suite. As we know, the C-suite will directly impact the direction of the company's future. The first changes were that they appointed a new CTO, a new VP of customer care, and a new VP of fulfillment. These C-suite executives all have very impressive track records and will be necessary to drive GameStop's future success. This means that the vision Ryan Cohen has for GameStop includes a heavy emphasis on digital transformation, similar to what Chewy had to offer. If this goes well, this could very well pivot GameStop from a brick-and-mortar store to an e-commerce play. This will also multiply the evaluations, not only based on increased sales, but also from brick-and-mortar evaluations. As we know, technology growth plays are always priced at a higher multiple than traditional brick-and-mortar companies. Even though GameStop is no longer at 140% short interest, the number of shares sold short is still quite high. The recent data published by Morningstar, which uses FINRA's latest data, still shows that there are 16.47 million shares sold short. This is about 60% of the float. Data from FINRA usually has about a 2-week delay, so we don't know what the short interest numbers look like as of today, but it's still safe to say that there are a lot of shares still being shorted. Roaring Kitty, or DFV, has also doubled down on GameStop and bought 50,000 more shares. However, we should note that he already has over $10 million in realized profits on the sidelines. During the GameStop hearing, DFV, or Roaring Kitty, had a poster of the words "Hang in there" as a sign to retail investors to not give up and sell for a loss. He also told Congress that he still thinks that shares are still cheap and would buy at $40 each, in which he did with his double down of 50,000 additional shares. If GameStop is no longer attractive, I believe any investor would take profits instead of doubling down, and DFE would be no exception. GameStop had a trailing 12 months of $7 billion in revenue in a global pandemic as a brick and retail game store. This is absolutely insane and tells us that there is still demand for its current offerings. With this, it also means that the company is currently trading at one-time sales if the stock price is about $100, which means a lot of room for upside. Can you think of any e-commerce play or any technology company that is trading at one-time sales? I can't think of any. To put this in context, the price to sales ratio for Chewy is about 6.5, Amazon is trading at about 4, and Tesla is trading at about 22. If we take a look at the balance sheet, GameStop still has about $450 million in cash since last quarter and can easily survive the pandemic. It has also filed to raise more cash, and imagine how strong the balance sheet would be if capital is raised at current or even higher evaluations. GameStop also has over 55 million Power Up loyalty members as of mid-2019 and still growing, and they can easily leverage this during their pivot to the digital transformation. And with the recent Wall Street Bets fiesta, the whole world knows about GameStop's existence. This level of free marketing cannot be understated for the company's future success. We are also in the middle of a new console cycle, which will boost sales for GameStop even more. If you're looking for more facts or somewhere to cross-check, I recommend gmedd.com. They do some fantastic work over there. The last fact is that your wife has a boyfriend. Even my girlfriend has a husband, and his name is DFE. With all jokes aside, this is why I'm in GME over something like Nokia or AMC. There's a ton of turnaround potential and a huge upside without even relying on a potential short squeeze that may or may not come. For me personally, I like the stock and I plan to hold on to this stock and witness one of the greatest turnaround stories that we'll ever see. I'll average down my holdings if the price drops below $30 or so. I don't believe the GameStop story has ended. In fact, I believe it has just begun and we're in the very early innings of the story. As always, this is just my opinion and my thoughts on the stock. Please do your own research before jumping into any conclusions. This stock could easily just tank and never go back up again. We should have realistic expectations. Please let me know if you have any questions in the comment down below. I would really appreciate a thumbs up and subscribe if you want to see more content. Peace.
Soon may the Tendy Man come to send a rocket into the sun. One day when the trading is done, we'll take our gains and go.